Hi, welcome back. You're still with us on Markets Today, and it's time to go to the rest of the headlines that we are tracking for you. To the fourth headline now. Container Corp gained over 1% after the Railway Ministry unveiled a new land license fee plan with a longer tenure and lower rate. Mangnam Malu is here with what brokerages are making of this move and what it means for the stock. Mangnam.
The fact that the land license policy has been cleared and we got some clarity coming in from the Railway Ministry officials in the press conference today as well. And the brokerages are happy with the fact that now that this hurdle is away, we will perhaps see an accelerated push for privatization, and that's what they're pinning their hopes on. What they aren't pinning their hopes on, or what they haven't factored in their valuations yet, is the potential benefit that will come in, because we are still awaiting the details of the exact benefit coming in from the land license fees, whether it's 6%, whether it's 1.5%, or how much more it will be once it's bid for. But directionally, it's a positive, and that's what brokerages like Credit Suisse have been saying as well. Nomura, for instance, they've left their estimates unchanged, but they've upgraded the stock, so that's an interesting move out there. And Jefferies too believes that this was an important step in the path towards privatization. However, the one brokerage that stands out is Kotak, which has maintained or rather downgraded the stock to reduce after yesterday's development, because they believe that they had factored in a land license fee of 3%, and that hasn't come by. The 1.5%, of course, is prospective and not retrospective, so they believe this is a negative development as per their estimates. And as far as the privatization is concerned, they believe that this is a positive event, but they can't put a number to it.
5 साल को अगर हम ठीक कर दें, we give it a certain 35 years का period, right? 35 years का एक period दे दें और एक clearly defined formula बना दें, तो बहुत सारे लोग रेलवे के साथ जुड़ के अपने मल्टी मॉडल कार्गो टर्मिनल्स बनाएंगे. कोई कॉनकोर से स्पेसिफिक ट्रीटमेंट नहीं है. दिस पॉलिसी इज अ जनरल पॉलिसी फॉर एवरी पार्टिसिपेंट इन द लॉजिस्टिक्स सेक्टर. किसी भी स्पेसिफिक किसी कंपनी के लिए नहीं है.
Okay, that is about Container Corp. Moving on to the fifth headline now. Interglobe Aviation fell close to 2% after the company's founder and former director, Rakesh Gangwal, sold a small 2.8% stake in the airline. The small slice of his over 36% stake kicks off what is likely to be a gradual drawdown. Sonia Shenoy is here with all those details and what it means for the stock. Sonia.
Well, thanks a lot for that. So 7 months after stepping down from the Indigo Aviation board and stating that he would sell his entire holding over a period of 5 years, the co-founder of Interglobe Aviation, Rakesh Gangwal, and his family have now started the process of selling their stake in Indigo. The Gangwal family today sold 2.8% stake in Indigo for 2,000 crores. Remember, the co-founder Rakesh Gangwal and his wife Shobha Gangwal together own 23% stake in Indigo as on June 2022. Now, the Gangwal family trust and cumulatively owns about 36.6% stake in Interglobe Aviation. And Rakesh Gangwal had indicated that he would sell his entire holding over a period of 5 years. Now, the stake sale today was possible after the modification in the Articles of Association, which allowed the sale of shares by promoters without seeking the approval from the other. But what this does is puts to end years of dispute between the promoters. Post the stake sale, Gangwal's holding will be down to about 33.8%, while Rahul Bhatia, who's the other co-founder, will continue to hold 37.8% of the airline.
Okay, all right. Interesting times for Interglobe Aviation. Sonia, thank you so much for all those details. From the broader markets, it was Schneider Electric that rallied 10% after the company said that they will enhance their production capacity of vacuum interrupters and circuit breakers. What does it mean for the stock? Vaishta Unwala is here with the details. Vaishta.
Well, Schneider Electric Infra has been the stock in focus today. The company has approved enhancing the production capacity of vacuum interrupters and vacuum circuit breakers by setting up a manufacturing unit in Kolkata. The existing capacity of the company is at approximately 80,000 MV vacuum interrupters with an existing capacity utilization of approximately 90%. Now, the capacity that is going to come up will be increased by 1,80,000 MV vacuum interrupters and MV vacuum circuit breakers assembly lines. This will require an outlay of approximately 138 crores, which is supposed to be incurred over a period of the next 3 years. Now, the rationale behind this expansion is to meet the domestic demand as well as increase the exports to Schneider Electric global entities to accelerate Atmanirbhar Bharat initiative of Government of India. Now remember, this expansion has a strong potential to increase the revenues of Schneider Electric. For FY22, the revenues stood at 1,500 crores approximately.
Okay, all right, Vaishta, thank you so much for all those details. Moving on to the other set of stocks that did really well. Cement stocks have been in focus. An uptick in demand due to receding monsoon and upcoming festive season has seen these stocks surge, but cost pressures continue to exist. Even as these pressures exist, consolidation is expected in a market, says Anil Singhvi, who is the executive chairman of Sri Digvijay Cement. Meanwhile, P. Radhakrishnan, the whole-time director and CEO at Kesoram Industries, says his company is not in talks for inorganic growth. Listen in.
So demand has been a little tepid in those areas where monsoon has been heavy, and I expect that prices will inch up in next fortnight or so, because the monsoon seems to be now withdrawing and demand is picking up again. So my expectation is that the prices which we lost during last 2-3 months on account of monsoon will come back again. Cost side pressures are still there. They have not come down except for the pet coke. So industry's profitability obviously is still under a lot of strain. But if the prices move up with the demand in October, I hope margins will come back again from the October-December quarter. You have the first 5 players having capacity to really consolidate the industry further. So I look at it next 2-3 quarters time, there will be definitely consolidation.
Has any of these big players come and said that have approached you? Any kind of discussion?
Absolutely no.
Okay. But what if you're trading at about $60 per ton or less than that? If there is an offer, do you think promoter will be willing to sell?
Absolutely no.
Okay, that is all about the cement industry. A lot of consolidation expected out there. But to the big name now, Infosys's buyback 1-year cool-off period ends today. And Rima is standing by at the big wall with all the details. Rima, does this mean we can anticipate another buyback announcement from the company soon?
Thanks so much for that. So as you pointed out, the buyback period for Infosys cool-off has ended, which basically means that there has to be a 1-year gap between when the buyback ends and the next buyback can be announced. Now that the buyback cool-off period has ended, it means Infosys is eligible for a buyback. So the question is, should we expect an announcement immediately? The answer is no. Now, in the last buyback, the gap between the cool-off period ending and the company announcing a buyback was a good 7.5 months. And the one prior to that, it was just about a matter of 2 to 3 weeks. It's possible that the 2021 buyback was a bit delayed due to COVID. The company was considering, saving up a bit on the cash. But the earliest we could expect an announcement is perhaps with its Q3 numbers. That's the 12th of October, because typically Infosys announces its buybacks along with numbers. Now let's understand what the past buybacks of Infosys portray as a 10. For starters, it will be the company's 4th buyback. And the details in terms of the size are up for you on your screen. The 2021 buyback was 9,200 crore. The one before that was 8,260 crore. And the one before that was about 13,000 crore. The last 2 buybacks were open market buybacks, not a tender buyback. And the maximum premium at which the buyback was done, the price at which the company was willing to buy back shares, was close to about 25% in the previous buyback. So in terms of a precedent, what is it that we can expect? Perhaps an open market buyback and no promoter participation. Now let's move on in terms of what Infosys' stated capital allocation policy is. It is to return 85% of its free cash flow over a 5-year period between FY20 to FY24 through a combination of dividends and buyback. And so far, the company has returned 73% of its free cash flow for FY20, 21 and 22 combined. The quantum of dividend being doled out by the company has also started going up. And last year, the company doled out or paid close to about 31 rupees in dividend. So now it's all eyes on this cash-rich tech major on when it plans to make a buyback announcement and what the contours of that could be. Back to you.
Okay, we'll watch out for if any other buyback is being announced by Infosys. But move on to the other news. Life insurance companies witnessed strong growth in their premium income for the month of August. New business premium income for life insurers grew by over 18% year-on-year, also registering a 44% growth from year to month. Yash Jain joins us with more. Yash.
Well, good growth for the life insurance industry in the month of August, and it's the private life insurance industry which has performed slightly better. As far as the total industry is concerned, the premium in the month of August, that grew at 18% on a year-on-year basis. Up to the month of August, that is year to month, the premium saw a growth of 44%. For private life insurance industry, the August premium grew by about 24% on a year-on-year basis. Up to the month of August, the growth was about 35%. LIC, August premium grew at 15% on a year-on-year basis, and that's a good number on the large base that LIC has. But the year-to-month premium, that saw even better growth of 49%. As far as the retail APE for LIC is concerned, that grew by about 5% on a year-on-year basis. For HDFC Life, the August premium saw a growth of 15%. Year-to-month, that is up to August, again 15% growth in premium, and retail APE grew by about 16% on a year-on-year basis. ICICI Prudential Life, the August premium, that saw a growth of 11%. Year-to-month premium saw a growth of 19%, though the retail annualized premium equivalent or APE, that shrunk by about 14% on a year-on-year basis. Now, speaking about the weakest spot this time around and the strongest spot, the weakest spot was Max Financial Services. The August premium shrunk by about 1% on a year-on-year basis. Year-to-month premium was up 10%. The retail APE also came down by about 12% on a year-on-year basis. The strongest spot, SBI Life Insurance, August premium growing at 21% on a year-on-year basis. Year-to-month premium up to the month of August growing at 44%. The retail APE though shrunk by about 5% on a year-on-year basis.
Okay, Yash, thank you so much for joining us with all those details. That's about the insurance industry. But with that, it's a wrap on this edition of Markets Day. Thank you for watching.